Well, let's talk now about what is happening at stocks. To put it in some perspective, yesterday's near 1,600-point drop in the Dow was historic in total points. Of course, that is a percentage of the market. It doesn't come close to the financial crisis of a decade ago. And the fundamentals of the U.S. economy remain quite strong. But we're looking at a live feed of the Dow, and it's dropping. No need to push the panic button, but why the sudden volatility? What is going on here? Well, for more, we are joined in the studio by our reporter, Westropp-Evans. But first, let's go to New York and market strategist Max Wolf. And Max, what is going on here with the stock market? What's behind this drop and this volatility?
So great to be here. Thanks for having me. Look, I think we have a number of things in play here, and it's always hard to explain one day's action, no matter how big that day is, even if it's a net 1,100-point day on the Dow or a 3+% loss on the S&P like we saw yesterday. But I think what we're seeing here is volatility has been very low for a very long time, maybe most commonly measured by the VIX or VIX, also known as the Wall Street Sphere Index, probably too low for too long. We had a market melt up for about a year now. The market's been shooting up way more than anything on fundamentals would possibly sort of excuse, even though the fundamentals have looked pretty good. We're in the middle of a good earnings season now, so things should be positive on that front. And we got those tax cuts. Separate and apart from that, though, we're seeing interest rates rise. We see a handover of control at the Federal Reserve. And even though Jerome Powell promises more of the same, quite literally, to Janet Yellen, who's the outgoing Federal Reserve chairman, there's a little bit of a question mark there, only because there's sort of a new sheriff in the financial town, which makes some people nervous. And I think the truth is we were just really overdue to sell. We started selling into some new volatility control products, and that really precipitated that very rapid 1,000-point sudden shot that we saw down yesterday, which quickly went global, as you pointed out. And if you look at global indexes all over the world, they priced in sympathy in an overnight rounds down, whether that's Asia, South America, or Europe. So they're pretty quickly contagious as well.
Asher, over the last 24 hours, I've heard the word inflation thrown around a lot of headlines. What's the role of inflation, if any, in the drop that we've seen over the last day? Well,
there's a general concern that the Fed, and this coming off the back of this month's jobs report, is likely with the increase in wages and the sort of low unemployment, we're likely to see an increase in inflation. If we look historically at the U.S. inflation rate, we have had historic low levels of inflation, now starting to creep up just a little bit, enough to put the Fed in the sort of moves that they might begin, increasing interest rates, and the era of cheap money that we've been seeing over the last decade or so might finally be coming to an end.
Max, I want to ask you, President Trump has been touting the stock market as really maybe his most significant economic accomplishment, or as the most valuable indicator. But in a sense, he's paying for that now, because part of the problem is that the economy is showing rising wages, for example, and that is hurting the stock market.
Yeah, look, I think to be fair, what we've seen economically for the last year, President Trump deserves no credit or demerit for. The U.S. economy is like an oil tanker, turns very slowly. We haven't seen any actual policies, economic policies, come into effect from the Trump administration until literally about 3 or 4 weeks ago. So I don't think it's fair to blame him for the downdraft in the stock market, and I don't think it's a reality-based understanding to give him credit for the stock market going up. The president's neither caused the stock markets to rise or fall. That being said, any sort of policy that we could have gotten that would have been positive could have something to do with the markets long term. Certainly markets very much like the tax cuts, and that was constructive. But again, day-to-day movements or even the larger movements of the stock market, very hard to attribute those to any president at any time.
And Asher, on this, not so much reaction from President Trump.
Yes, Trump has been notably...
fewer tweets.
Fewer tweets than normal, not touting the great gains, not touting the 84 records broken, not touting... This is not a time for celebration from the Trump camp, probably making a wise decision, perhaps for once in his tweeting policies regarding not speaking out loud, and just making sure that this is something he keeps on the back burner until there's hopefully a change.
Max, one fact you mentioned is that changeover at the Federal Reserve. Janet Yellen, who's, I think people are going to start missing her, but the real challenge is going to be on Jerome Powell, the new Fed chairman. How is he going to react to these reports or these concerns about inflation? What do you think, looking ahead, how he's going to have to deal with that?
Right, so seeing the Federal Reserve make unscheduled remarks, particularly substantive remarks about daily activity in the market, would be frightening in and of itself. It would be a major break in protocol and past practice. So we don't expect off-the-cuff remarks in an unscheduled format. We do expect lots of assurance, which Jerome Powell, has given prior to taking the mantle, which he officially did yesterday, and we will continue to do that. I think one thing we do need to keep a close eye on is we are starting to see the 10-year U.S. Treasuries creep up a little bit, still by historical standards not that high, but crept up pretty quickly. And we also have a U.S. government who, given the budget policies and the unpaid for tax breaks, is now committed to borrowing $1 trillion in calendar 2018 and another $1 trillion in calendar 2019. So that's about twice what we borrowed last year and the year before. And there are some concerns about the sustainability of that, particularly as maybe the standing of our debt around the world has come in for some question as we've been interested in reevaluating some of our international agreements in the last couple months.
Max, there does always seem to be a sort of silver lining in drops like this, at least for the people who know how to find that silver lining. Are there opportunities to be found here?
There are always opportunities in any drop. I mean, I think the better story is let the crazy days teach you lessons without necessarily jumping in there with your money. So in other words, the joke we used to like to tell the junior guys we trained them on the way up is, let's say you think you can fly. Make sure to take off from the ground, right? Do not take off from the roof. Because in the case that you're not such a great flyer and you took off from the roof, the end of the story is a bit more traumatic than if you attempted to take off from the ground. So there's a huge learning opportunity in these swoons. You try to figure out what's going on. But everything is cheaper than it was. My guess is market will struggle itself kind of sideways to slightly higher. 2018 is going to be a lot more volatile than the last few years. We knew that. And then the question is really the back half of 2018, where we have some concern that the fundamentals as well as the short-term price action might align to a weaker overall asset performance than we've been seeing in the last few years. You know, and last thing people should remember is the markets are triple where they were off their 2008 lows. So these markets have already tripled going into the melt-up of the last few months.
Asher, I just want to take a quick note of a point Max made, which is if we're going to start seeing these interest rates creep up, Donald Trump has added, with his tax cut, the potential $1.5 trillion debt to the U.S. That's going to start biting into that. The U.S. is going to have to start making some pretty big payments on that.
Well, that's exactly right. And they're going to have to find savings from somewhere. They're going to have to cut back on some spending projects. And it seems interesting, given Trump's moves to next major policy being that large infrastructure project. It's going to be interesting to see where they find the money for that.
Indeed.
All
well,
right.
Okay. Asher, thanks for joining us, and Max Wolf.
My takeaway is from Max: do not take off from the roof.